Good morning, everybody. Thanks for joining us for the weekly Q&A call. This is going to be your Thursday training where we dive into all the details and we make sure that all your questions get answered. So you should see my screen come into view in just a moment, and then at that point, we'll go ahead and begin. All right, so for today's conversation, we're going to start with one of the easier reports to create inside Edge, but it tends to be one of the most effective ones and one of the most versatile ones. And this is the cost of waiting. And the cost of waiting is basically a presentation where you're showing what the borrower could get with a loan that they take out right now. And then you're going to show them a couple of different options in terms of what would happen if they waited a little bit too long. You know, could rates go up? Could the price go up on the purchase that they're considering? And you want to keep in mind, you can do this for refinances or purchases, but I will tell you, if you're just getting into Edge, you want to start with a purchase just because it's going to be the easiest point of data entry, and you're going to get a report that you can immediately deliver out to your clients. So that said, let's go ahead and start a new cost of waiting presentation. Now, before I do that, actually, I want to make you aware, if you do have questions about this, please type them into the questions area in your GoToMeeting toolbar, and I'll be monitoring that on my other screen. So when those come in, I will definitely try to answer those to the best of my ability. We actually did have a new release that came out the other day, so I'll go over that with you guys a little bit and just kind of show you some of the new bells and whistles that are in there and show you how they're used. And besides that, of course, any questions that come in, we'll try and address those right after we finish with the cost of waiting presentation, and we'll get all your questions answered. So first things first, we're going to do a cost of waiting, so we're going to start with a brand new client. Now this is going to be a TCA. A TCA is a total cost analysis. Now the total cost analysis is going to be your bread and butter report here inside Edge. Now the total cost analysis is the one that allows you to compare multiple programs against each other and see those loan scenarios over time. So you can weigh the benefits of doing, say, a shorter term versus a longer term. You can see how much interest is paid over time, and you can eyeball where the break-even point comes on their closing costs. So we're not going to show necessarily too much about the break-even point today on the cost of waiting because we're not comparing two different types of loans. We're comparing two different time spans. So in today's one, let's start with a brand new client. Now for this one, I'm going to start with making it a marketing report, and I would encourage you that if this is your first presentation inside Edge, do the same. Start with a marketing report so this doesn't have specific borrower information. Now for the you have two options here, individual or marketing. I've chosen marketing. Now marketing, what this does is it actually eliminates any of the personal information, so the first and last name. It also eliminates the property address field, so none of that will show up on the final presentation. Now in order to do these, we're going to start with a report headline. So I'll call it the cost of waiting to purchase. And I do see there's a question there from Doug. He says, my team and I are new to Mortgage Coach. Please offer an overview of the system. Doug, what I would actually encourage you to do is view one of our Friday trainings. Let me show you where you can find those. The Friday is the beginner course that just gives you a broad overview on everything that's covered here. The Thursday training session that we're doing today is really more geared towards the nuts and bolts of putting scenarios together. So let me show you how to get to that training. All you do is log into Edge, and then you're going to click on the Help button up in the top right here. This is going to open our knowledge base. Now, in order to see the most recent Friday training, you're going to need to get to our site. You can do that by clicking on the Mortgage Coach icon here. Now, to explain, before I get off the knowledge base here, this is where you're going to come to find all your answers. So if you wanted to see tutorials on, say, for instance, how to read the total cost analysis, how to create purchase total cost analysis, these are all the walkthrough videos that are step-by-step, show you exactly how to do just about everything in Edge. Now you can also use this to search for your answers. So for instance, if you're wondering how to put in MI, for instance, you would type in MI and hit search. And you can see that there's several variables here that you can do. And for instance, why is my mortgage insurance not being included in my pity payment? This is one of the most common questions we get. And usually the reason is you haven't set your cutoffs correctly. But when you click on one of these, it'll actually take you to the article that's in there so that you can see exactly what to do. Now note that it's going to show you three options at first, but you can click on more and it'll go even further. So if you wanted to, for instance, create a borrower paid versus lender paid presentation in Edge, you can click on this guy. It has a YouTube video in there that will show you exactly what to do. Now, as I said, if you wanted to see the Friday Beginners course, what you do is you click on the Mortgage Coach icon up here on the left. This is going to go to our public-facing page. And then you hover your mouse over Community and choose Coaching Call Archive. Now this guy right here is the Edge Basics course. This is the broad overview on everything that's offered with your membership. When you click on this, it's going to take you over to our YouTube page. And this is going to open up the last intro that we did. And you can see that this was done on 3/7. One of our success coaches, Anthony Savala, did a great presentation on this one. I would highly advise you watch this so you can get a really good idea of everything that's offered here. All right, so let's get back over into our cost of waiting. And Doug, thank you very much for your response there. Feel free to stay on the call. You will pick up some great information on this one. The overview is definitely going to help you with the broad, but it's always good to have a little bit more detail ahead of time. Note that you can also get back to all these Thursday training sessions in that same area that I showed you. For instance, you can see last week we covered purchase strategies. In February, we covered mobile apps and creating reports for CPAs. So there's all kinds of good detail in here, and you can always come back and revisit these at any time. But thanks for joining us, Doug. Feel free to duck out if you want to go check out the Friday call. All right, so let's get back to our cost of waiting. Now, we've given it a report headline, so this is going to show up at the very top of your report. And there's a lot of fields we don't need to fill out in this Edge Wizard because the Edge Wizard basically is trying to guide you through taking an application over the phone, your initial contact with the borrower. But it doesn't have to be used that way. You can actually skip through a lot of these fields. So you'll notice that there are some fields that are in red, things like the report headline, or if this was an individual, it would be the first and last name. And for those cases where it's in black, this is not a required field. So if you don't have this information, feel free to move along. It's okay. Now I will explain what each one of these is for you so that you have an idea of what these do. Now, obviously, home phone, that's pretty self-explanatory. Client versus prospect, this is really more for your notes. Have you worked with this person before, or is this a brand new prospect? Renting and owning. Now, if you want to be guided through a rent versus own presentation, you're going to choose the rent switch here. However, if you want to do a total cost analysis, and actually you can do a total cost from either one, but if you do toggle to rent, it's going to try and guide you through the rent versus own. If you know you already want a total cost and you want to just do that from the beginning, select own here. Even if they don't own a home, it's okay. I'm going to show you an area on the next screen where you can eliminate questions about current mortgages, and it'll just focus on new purchase transactions. Now, partner email. Partner email is pretty important. If you are working with a financial planner, a realtor, CPA, anyone that's going to be part of this transaction with the borrower, and you want to be able to copy them in on all the alerts that you get, the same ones that you get telling you that the presentation has been viewed, you can actually have them copied in. But in order to do that, you need to make sure and enter their email address right here. So I'll just put in one right now. And actually, a question came up on the Tuesday call last time and on our Facebook page. One of our originators was doing just this. He was copying in the partners on the presentations he was putting out to his borrowers. But one of them actually came back and said, hey, I wasn't aware you were going to copy in my realtor. I'm not real happy about that. So the question posed was, should we be getting permission from the realtor first? And I would tell you, absolutely. This should be part of your value proposition when you're talking to the realtor partner and when you're talking to the client. There's lots of verbiage you can use to put this out there, but generally when you're talking to that client, it's, hey, I'm working with your realtor, Joe Realtor, and I wanted to ask you, do you mind if we copy him in on these alerts that I'll be getting so that he's aware of what's going on and what part of the process we're focusing on and what your loan options are. And usually 9 times out of 10 they're going to say, oh yeah, absolutely, as long as, if everybody's got the information, it's so much easier to move along. But you're going to run into the occasional person that says, you know what, no, I don't really want them to know, what I'm looking at financially yet. I mean, obviously there's no sensitive information on this presentation, but there's going to be some borrowers that are just not going to go for that. So tackle it up front. Make sure that you get that out in the open, and you got to position it as something that's valuable to speed along the process of their home buying their home buying experience. All right, so friendly name field. Friendly name is more critical for when you're doing individual reports, because an individual report is just going to have the borrower's name on it, but you may have several presentations for a single borrower. The friendly name field helps you to differentiate what those particular presentations are. Now, when you put in a friendly name, what's going to happen is anytime you go to search for this record when you're in your home screen, that friendly name is going to show up in your search. So you can search by friendly name, which is pretty cool. Now, beyond that, if you have multiple presentations, it's going to help you to differentiate. Say, for instance, if this one was for an individual borrower and is for the primary residence, I'd probably want to indicate this is the primary residence. Then if I had a second one for this borrower for, say, an investment property, I'd want to put the friendly name as investment. It's going to help me to see it when I go back to the home screen. So I'll show you what that looks like in just a second here. But for marketing reports, usually you can leave this blank because the report headline is pretty self-explanatory. It tells you what this particular one is. But I might put something here like, let's see, approval to copy in Realtor, something like that. And then your save buttons are these right and left arrows inside Edge. So just make sure that anytime you want information saved, if you want it to funnel into the live and print copies of the report, make sure you click these arrows. Now I'm going to go back to the home screen real quick because I want to show you what that friendly name field looks like and why you would use it. Now you can see that I can always double click on this entry right here and it's going to take me right back to that data entry point we were just at. But what if I started this file a while back and it's not in my list of the most recent ones that I've done? The way to find older files or files that you worked on in the past is hit View All. Now View All pulls up a filter, so you can filter every single one that you've ever entered inside Edge. And you can see that I've got lots and lots of them in here. Let's find my most recent one. So I'll go down to the cost of waiting. And there's the one I just entered, and you can see that if I click the little drop-down arrow there, it shows exactly what that is. Now, if I had multiple presentations for this particular one, it would show multiples under this particular marketing presentation. Now, this is the friendly name, and this is where it appears. So you can see why it's important. If I didn't input a friendly name here, it would only show a date and time stamp. I wouldn't be able to tell what this report is versus other reports that I've done for this particular client or partner. All right, so let's get back in there. And we are now on the goals screen. Now, remember I told you on the client screen to check Own if you just want to be guided through a TCA versus a rent versus own. Now, in order to drop off the questions about the current mortgage, all you have to do in the goals screen is select Purchase a New Home. Now, when you do that, you'll find that it does get you to a screen that has questions about the current mortgage, no detailed questions, but these aren't required. Now, the one field that I would encourage you to input is current property value. And for a purchase, this is going to be the purchase price. Now we get to affordability. Now, this is a marketing presentation, so I don't have specific information about this particular borrower. So I can actually leave all of this off. Now, that said, if you are going to show tax benefit, you need to make sure and enter a tax bracket here. So if this is a marketing report and I want to show tax benefit for home ownership, I need to kind of isolate what particular tax bracket I'm looking to target here. Now, generally, 25, 28 are going to be the most common tax brackets that you're going to use. If you wanted to check, you can always hit Find Tax Bracket. This is going to open up a new window that basically just shows you what the income ranges are. So you can see that anywhere between, at least for a single person, $36,000 and $183 is going to give you 25 or 28%. Now you can also alter this if you wanted to see what it looks like for married filing jointly. You can see what those income ranges are here. So for this particular presentation, I'm just going to assume a single person, and I'm going to put them in the 25% bracket. Now, if you don't want to show tax benefit on your presentation, just leave out the tax bracket right here, and there won't be any indication of tax benefit. Now, one quick note about the tax benefit. When you are showing this on your presentation, if you don't have a CPA designation, financial planner, anything like that, you want to make sure to disclaim yourself. Anytime you've got anything that looks like tax advice, make sure to let the borrower know that they should contact their CPA or financial planner for detailed information about the tax benefits associated with the mortgage, and that should keep you in the clear. All right, so the minimums and maximums, we're not asking these questions of a specific borrower, so we can go ahead and bypass them, and we can get straight over to our new products. David's question, does the tax bracket only refer to federal? Yes, David, that is only for federal tax. So the name for this particular product, this is going to be the loan that we can get them right now. So I'm going to call this one Buy Now FHA. And I could probably go a little bit farther. Now I will tell you, you probably noticed this little pop-up that came up on the screen. For best results in print, you want to keep your product names under 12 characters, especially if you're doing 4 products. Now, the reason behind this is it's going to look fine on the live presentation if you use 25 characters. However, if you expect this to be printed, if you have an incredibly long product name, it's going to push some of the other products out of the printable view. You know, you've got a finite amount of space on that print job. So I would tell you that get used to using acronyms and abbreviations as much as possible, and keep the names nice and short. You can always use the payment notes to put a little bit more detail about what these particular options are. And of course, anytime you do a video, which I would encourage on every presentation, you can explain further about what these particular products offer in that video. George's question, what is the tax credit used for? Good question, George. So that was back 2 screens. There is a tax credits button here. Now what this is for the MCC credit. That's a mortgage credit certificate. Now mortgage credit certificate allows the borrower to write off a certain percentage of the interest every year, and basically it gives them a credit rather than just a deduction. So it's particularly more valuable than just the regular mortgage interest that they can write off. Now you want to consult your lender to make sure that you can offer this, but these are state specific. So each state usually has different guidelines for how much interest they can write off and what the annual cap is for that interest they can credit. Now, if you do know that your lender can offer this, and again, you can ask your lock desk, you can ask your underwriting department if this is available. But if you do have this available, you can click on tax credits, and then it asks you, what's the annual amount of the MCC tax credit percentage? How much can they actually get a credit on? Now in California, these are 30% of the annual interest or $3,000. Now again, you want to check your local state guidelines. It's really easy to find out. Just go to do a Google search, type in MCC and then your state name and then maybe guidelines. And that's going to take you to a page that's going to detail the guidelines for your state and what is offered there. And it'll probably also give you a couple of avenues to find out where you can find out more information about it. But again, your local lender, your lender is going to have more information on whether they can even support this, whether they like to use it. But oftentimes, a lot of lenders use the MCC tax credit to qualify your borrower at a lower percentage, because that tax credit technically is going to reduce the amount that they're responsible for. So their DTI qualifiers can be a little bit higher because of this credit. But again, contact your lender on that one. They'll give you more details. Edge just gives you a way to show it. Now, if I do want to use this tax credit, I've got to make sure and fill in both of these fields, and I've got to make sure I've got a tax bracket in there. Now, if you'd like to see the actual equations behind our tax benefit for all our presentations, we have that in written form for you. You can always find it in our support center. You just type in tax. And there we go. How is the tax benefit calculated? And you can see that when you click on this, this actually gives you the detailed information behind that tax benefit equation. Now, feel free to also send the note over to support if you'd like to have us send you one. This one here doesn't actually say anything about the MCC credit, but the one we have here in support does. I'll update this one by the end of the day today, so you guys can have that full equation. All right, so let's get back over to our products. Now, when you do use that MCC credit, you get a new checkbox at the bottom of every product. Do you want to apply that credit to this particular product? Now, if you check the box, it will indeed apply that credit, and you'll notice that the tax advantage is significantly higher for the programs that do have it versus the ones that don't. So I will do, matter of fact, I'm going to leave the, I'll show you the MCC tax credit, and then I'll take it off when we get to the final presentation. So this one is going to be an FHA program, what we can get them right now. Now we've got a $250,000 loan amount. I do need to check, yes, this is an FHA program. Now this particular toggle will open up the upfront MIP field in the next screen. If you check no here, you're not going to have an area to enter that, and your total amount financed is going to be off by the amount of the upfront MIP. So watch out for that. Make sure you always check yes if it is an FHA loan. Now for down payment percentage, we're going to put in a percentage here. There we go. We got 3.5%. And then we're going to put in our interest rate that we can get them right now. Let's say we can get them about 4.5. And then our term. Now loan type, this is going to be a fixed, but if this was an adjustable rate mortgage, you'd want to select ARM here instead, and that's actually going to open up a bunch more fields in the next screen that will allow you to input the caps and adjustments for that particular ARM. Now for this one, we're going to leave it as a fixed. If there was an interest-only period here, you'd want to indicate how many interest-only months are. Say, for instance, a 10-year interest-only period, you're going to put 120 in here. Now, balloon payment, this is really only used for second liens. Usually don't run into this on a first lien. But what this is for is, let's say you've got a second that is a 30-year term but due in 15 years. that balloons at the 15-year point. So in a case like that, you would put 180 in here. But for a first lien, I'm going to go ahead and leave that blank. I did apply the MCC tax credit. Now I'm going to pull in one of my closing cost templates, or if you want, you can ballpark these fees. Just kind of guess at what they're going to be. Remember, this is all pre-GFE, so you don't have to be absolutely spot on with what these are going to be, as long as you disclaim yourself that, you know, your closing costs will be, you know, it will be displayed in more detail on your good faith estimate or something like that. But for the sake of getting out just a generic proposal like this, it's just going to be a marketing report. You know, you can do either one. I would tell you that if you actually detail the line items, it's going to look a little bit more transparent for your borrowers, for your prospective borrowers, and it's going to show them more of what they're going to get when they actually do a specific presentation with you. So that said, instead of doing these ballparks, I'm going to go into the closing cost detail. And I am actually just going to go ahead and choose one of my templates in here. So there we go. There's an FHA purchase. And because I saved this as a template earlier, I've already got all my fees in there. All I need to do is do things like enter my hazard insurance premiums, my property tax reserves, stuff like that, things that change on a case-by-case basis. But all my regular fees, I'm going to leave them exactly the same. So let's say that this is going to be about $500 there. We'll go with $750 for tax reserves. And then you can see I've got it all the way down to my loan origination fee. Now make sure you keep an eye on who's paying these. Owner's title sometimes is paid by the seller, so you can tag this as paid by seller and the borrower will not be responsible for it. Make sure you've got the APR checkboxes right. If you don't know which fees are supposed to be APR and which ones are non-APR, shoot us a note over at support@mortgagecoach.com, and we will get you a list of fees that generally do apply to APR, the ones that don't, and then there's going to be a couple you want to ask your lender about just to make sure, because they kind of vary between lenders. Now the add to loan checkbox, usually you're only going to use this for refinances. And what happens with this is it actually increases the amount financed by the amount of whatever fee that you check here. So for a purchase, you know, we can't go above that the 97.5 LTV, with the exception of the upfront MIP. So we really can't roll anything into this loan. So we're going to leave all these unchecked. Now in a refi transaction, usually you are going to end up rolling all of these into your loan amount. Just make sure you're observing the LTV guidelines. If you're just short of 80 and you roll in all your fees and it brings them over 80, they're going to have to use MI. So be careful about that. Keep an eye on your LTV and only roll in enough to get to right at the point where they're not going to be responsible for either a program hit, a rate hit, or MI. Now PPE, these are prepaid escrows. Prepaid escrows are the hazard insurance reserves, tax reserves, first year premiums, stuff like that. Now these don't factor into the APR, but they also don't factor into the short-term area. All the other costs do. So we don't view these as a cost of doing the loan. Rather, they're just a cost that's going to be due from the borrower. But the whole idea is when we're showing the loan comparison over time, we want to make sure we're comparing apples to apples. And since all the loans are going to end up paying these same premiums, there's really no reason to include it in the short-term savings. Now, once you're done with this, and if you have not created any templates at all yet, so you don't have the ability to just pull one down like I did, you can actually just add fees. Just keep hitting add fee, add fee, add fee, and then make your selections. You can choose from the fees we have, or you can create your own custom fees if you like. If you want to do that, hit add custom fee, and it's going to give you the option to create a new fee with whatever name you like. You can choose what the percentage is supposed to be based on. You can choose to default it as a prepaid escrow or as an APR item. Now once you do create that, it'll actually be available in your drop-down list. So you can see I've got my one-year hazard insurance reserves. That actually is a custom fee that I created, so it's now appearing in my drop-down list. That means I can select it for any future presentation. Now once you're done inputting all your fees, especially if it's the first time and you haven't created any templates, save it as a template. So hit save as template, call it whatever you'd like. I'll just call this one training template. Now if you want to specify that this is only for a certain state, you would choose a state here. If you're going to use this template for multiple states, just leave the state field blank. Now the reason you would do this is if, for instance, California had a specific set of fees that I'm going to charge for FHA, what would happen is I would tag California here. Then anytime I want to bring in this fee, I would need to make sure and choose California from this drop-down and then this filter on the right will show only those templates that are available for California. But for this particular one, I would have saved it probably without a state because this is going to be a more global fee schedule that I can use for any state. And once you're done there, hit Apply to Loan. Now when you've done that, you'll notice it grays out some fields for you. Now these fields, you can edit these, but you just can't edit them right here. You have to go back into the closing cost detail and edit the specific line items if you want to edit these totals. The last part, we've got to make sure to account for that upfront MIP. So we're going to put in the 1.75%. And then I'm going to check the box to add the upfront MI to the loan amount. This will increase the amount financed by the amount of the upfront MIP. Now what this means is that your LTV over here is going to show about 98.1 or something like that. That's okay. The LTV can exceed 96.5 with the upfront MIP. It just can't exceed it with closing costs. Now before we move off of this one, I want to show you how to do a contribution, because oftentimes you will have contributions available, whether they're lender credits, seller credits, whatever you want to use. Now we've actually got a fee in here already, so there's no need to create a custom fee. Hit Add Fee, hit the drop-down selector, and then type C. And this is going to take you to all the C's in the list. And you can see we've got one in here called Contribution. Now this one's important. This actually has logic in it that knows that whatever amount you put in here is going to knock down the cash to close by that amount. Now, if you were to create a custom fee and call it something like lender credit, lender concession, you can do that, but you got to do it a slightly different way. So let's say lender concession. Actually, let's make it a seller concession. That sounds better. And then you hit OK. Let's say that this was a $3,000 credit. Now I can do it just like this, and you can see my contribution knock down my borrower paid fees, and it shows the lender paying that. If this was a seller credit, I would just choose seller. Now we can do the same thing with this custom item if you just wanted to change the name, but rather than attributing it to the seller, it has to go to the borrower. Remember, this doesn't have logic to know that it has to knock down the cash to close, so I need to tell it that this fee needs to knock down borrower paid fees. If I'm going to do it that way, I'm going to put -3,000 and leave it as borrower paid. These two function exactly the same. But I would tell you, for ease of use, create this one time if you create the custom fee, and if you want to do it, make sure you're always using a negative, or use the one we gave you. It can be a positive. Edge knows it has to subtract it from the cash to close, and you'll be in the clear. All right, so I'm just going to use the regular contribution here, and you can see it's knocked down my total borrower paid fees here, and it shows that seller paid fees are now $34.50. And the reason for that is the seller is also covering this $450 right here for owner's title. Once you're done there, save it as a template if you don't already have it saved, then hit Apply to Loan. Now we get into the monthly costs area. Now, monthly costs are just exactly what you think. These are monthly, and I see a lot of people putting these in as annual. Before we move on, George had another question. He says, can we call it contribution seller? You can, George, but if you're going to do that, it is a custom fee, and it won't have that logic in there. So you've got to do it that second way I showed you, which means create the custom fee, call it contribution-seller, make it a negative amount, and make it borrower paid. So it has to have the negative number unless you use the one we called contribution. That's the only one with logic in it. All right, so let's get over to our monthly costs. We're going to input our hazard insurance and our property taxes. And again, this is a marketing presentation, so I don't know specific figures for this particular borrower. I want to use factor percentages. And this helps a lot because when I go to copy this presentation into a new scenario line item, it's going to copy those variables with it. It's automatically going to calculate what they should be. Say, for instance, if I'm showing two different purchase prices. So I'll put in my 0.35 for hazard insurance. And in California, our property tax is 1.25. Now, this is going to require mortgage insurance. For those of you who are brand new to entering data into Edge, I would encourage you to pay specific attention to this part right here. This is what you were going to do with your FHA loans. Now, FHA mortgage insurance is obviously different from what conventional offers. Conventional, it just has a cutoff of 78%. It can drop at 78%. Nothing further is due. FHAs, especially the high LTV FHAs, have to carry for the life of the loan. So what we're going to do is we're going to enter our factor percentage, and you can refer to your MI guidelines for this. If you'd like a copy of the FHA MI guidelines, shoot us a note over at support@mortgagecoach.com. We'll get you a copy of that real quick. So I'm going to put in my 1.35. The MI cutoff percentage in this case, it doesn't even come into play. I want it to carry for the life of the loan. Now, very critical for all government loans, you have to check this checkbox to calc the MI on the balance. What this does is this recalculates the mortgage insurance payment every year based on the outstanding balance for the last 12 months. Now, this is really important. Conventional loans do not do this. They're going to have a solid MI payment all the way until it hits the cutoff. FHAs and USDAs do use this. So what's going to happen is this MI payment is going to decline over time. When we get to the last payment on the loan, it's going to be like $2 of mortgage insurance. So you want to make sure you do this. Otherwise, your APR is going to be really high because it'll assume that this payment stays constant until the cutoff. Not the case with FHA loans. So we want to make sure to check this box. And the last step, and this is pretty critical, it's got to carry for the life of the loan. So I'm entering the MI cutoff month as the last month of this term. All right, so I've got my first product in there. It's just, what can you get from buying now? So I'm going to add another product. Now, product 2, I'm going to call it Wait for Drop. So this is going to show them what would happen if you waited for a price drop, maybe a month, maybe 2 months. But what the negative ramifications could be for waiting so long is that the rate could go up during that time. And as you guys know, inventory is really low right now, so price drop is kind of not really even a viable option in most cases. We're not seeing people doing a whole lot of concessions here. We're seeing more bidding wars going on. So it's up to you on which of these fields you can use. I'm going to show you 4 different ones that you can put in here. You can pick and choose the ones you want. I see a lot come across that say buy now, and then the second one is just worst case scenario. So they don't even include this, but it's up to you. I want to show you all the options in case you do want to show it. So this one is going to be wait for drop. Now, I don't want to redo all the legwork I just did, so I'm going to use the copy button. And I'm going to copy my Buy Now FHA product. Now, when you do that, you can see it copied everything. It copied all the details of the loan, even down to the MCC credit being applied. And as we go through this, you'll see that it copied the closing costs, and it copied the monthly costs. So everything's there for me. Now all I need to do is make some slight edits to show what this is. Now remember, we said that this is what would happen if they waited for a price drop. So let's say they waited for a price drop. It actually went down to $240 because the house is dilapidated and it's going to need to be fixed up anyway. But in that same time period where they waited for this to drop 10 grand, that interest rate could have gone up significantly. Now it's up to you, totally subjective on what you want to use for an increase on the interest rate. But if you look at the rate watch, and especially if you're sending this cost of waiting out to prospects, you want to include a picture of the rate watch so they can see how volatile the market is. I mean, it changes by the hour. It doesn't just change by the day. And borrowers may not be aware of exactly how much impact this can have on their mortgage. But if they were to wait for a month or so, we can easily see a full point rise in interest rate. For this case, I'm going to do a 0.75 rise. So I'll do it to 5.25. So that's all I needed to do. I changed my purchase price, so I dropped it, but I increased the interest rate. Now I'm done with this one. I can go through and verify my numbers if I want, but I know because I use the copy function, it's all in there and it's all good. Now I'm going to add another product. What happens if they waited for that month and there was no drop? So I'll call it no drop. I'm going to use the copy from button, and I'm going to copy that FHA product again. And what I'm going to do is I'm going to leave the purchase price the same, but remember they waited a month and the rate went up by 3/4 point. Eric's question, how do we include the rate watch? Great question, Eric. I will make sure and get to that as soon as we're done with this presentation. When we generate the link, I will open up an email, and I'm going to show you how to copy and paste the rate watch charts into your email along with your Edge link. All right, so because I use the copy button, remember, this is no drop. I didn't change the purchase price, but I did change the interest rate. I'm done with this product. So we've knocked out 2 products very quickly here. Let's add a 4th one. Now the 4th one is going to be the worst case scenario. And what I'll do is I will copy that FHA loan program one more time. And this one is going to assume, okay, you waited for the month. The price didn't drop. It actually went up. And during that time you waited, guess what? The interest rate also went up. Now notice the order I'm doing these in. What this is going to do is, you can see this is going to be kind of a step-up graph all the way through, and the worst case is going to be the highest. Now, one of the things in Edge, I get a question quite often, can we reorder our products in Edge? It's not easy. You'll have to copy them to an open product slot and keep using the copy button to move them around. So what I would tell you is kind of have a plan of action in mind when you first start entering your products. I like showing this upward progression here, so that's why I do it in this order, and you'll see it when we get to the final presentation. But it's not easy to change the order around because you are going to have to do a lot of copying and pasting between the products, and you'll have to do a little bit of additional data entry. So with that said, kind of have a plan of action in mind when you first start. All right, so worst case scenario, the price and the rate went up, and let me make sure I adjusted that rate. I think I did. Good, I did. So I am done with the data entry on this one. Now I can go to my analysis screen and just kind of take a look at what's going to come out here. Now you can see that I've got this cool progression here. The savings are all benchmarked against the worst case. So if I buy now, it's gonna cost me $190 less. I'm going to save $190 versus if I wait and prices go up and rates go up. Now, Chris's question real quick. He says, I'm trying to follow along with my own Edge and I didn't get the charts on the right. You'll only see those charts on the right, Chris, when you're inside the product screen. If you don't see these for some reason, shoot us a note over at support@mortgagecoach.com and include a screenshot if you would. That'll help us to figure out what's going on there, but that's certainly not normal. You guys all should be seeing these charts if you're filling in the products. Now, if you're not actually filling in the products with me, the charts won't be there, obviously, because there's no data. But that said, if you're filling in products and you don't see these charts, there might be a problem. You might actually be doing an open house flyer rather than a client report. All right, so let's get back over to our analysis summary. Now remember I told you that right now this is all comparing against the worst case. Now one thing I want to point out to you is you can change the benchmarks depending on what kind of strategy you're doing. Right now, worst case is the benchmark, but what if I want to show pain points? Let's benchmark it against the buy now. So buying now, it's going to be the best option here. If you wait for a drop, it's going to cost you $34 more. No drop is going to cost you $112 more. Worst case will cost you $190 more. So it's just a matter of how you want to position your statements when you're talking about this, and whether you think the borrower is going to be more apt, or in this case for a more global presentation, it's really just how you want to pitch it. But if this was for a specific borrower, will that borrower be more apt to act on pain points or on savings points? Either case is perfectly acceptable. It's just how you want to position it. Now you can do the same thing in the short-term area here. You can choose which one of these you want to be the benchmark. So if I wanted to show the pain points of waiting, I can show them that the worst case over the course of 60 months is going to cost them an extra $9,600 in interest and MI. Now for the long-term metric, I would always encourage you to show long-term total interest and MI paid. These are the real costs of the loan, and it's the telling point. You get a good progression going from here's your monthly differences. Your short-term area is going to be your differences in the unrecoverable costs of the loan. Those are interest, MI, and closing costs. Remember, we don't include the prepaid escrows in this equation. And then the long term is just, okay, here's the global, how much interest and MI is it going to cost you for each one of these loans over time. So each one of these is just slightly different in what it's covering, but they all center around what's it going to cost you. Jim's question, are the short-term savings calculated over 5 years? Yes, they are in this case because I've got 60 months selected, but you can change this at any time. So if I wanted to show them a 10-year here, and then maybe I wanted to show them life of the loan for the long term, I can do that. And you can see that we've got more significant figures to talk about here. And specifically on a cost of waiting, you might want to show them the full term of the loan to see exactly how much interest. I mean, that's $60,000, $54,000 in interest and MI that they'd be saving by acting now versus waiting for a worst-case scenario. Before I move along, and you probably won't use this for your marketing presentations, but you can if you'd like. There's a button here called Adjust Reinvestment Strategy. Now, there is a monthly savings difference between each of these programs. So if I want to show apples to my borrower on what would be the out-of-pocket expense, I might want to account for these savings going back into their current savings account or into an investment vehicle. It's up to you on how detailed you want to get. You can do it by hitting Adjust Reinvestment Strategy. And this one allows you to assign principal reduction payments up here at the top, or you can funnel those savings back into their current savings account. Now remember, we didn't fill in the affordability section, so the current savings account is not represented here. Now the bottom section allows you to put it into a new investment vehicle. So if, say for instance, you're partnering with a CPA or financial planner for this presentation, you might want to show this 190 going straight back into a new investment vehicle that your financial planner is offering that has a 3% yield. And you can see the investment at 30 years, they've got $110,000 in the bank that they wouldn't have had with this worst case scenario. So again, you've got the option there. For your first presentations, I would say don't bother with this just yet. Focus on just the nuts and bolts of the report, and then we'll get this out. All right, so let's continue on. Now we get to the contact information area. Remember, this is a marketing report. None of this property address info is going to show on the report, so go ahead and skip it. Now we get to presentation. Now this is all about how are we going to deliver this and what additional little tweaks do we want to make to it before it gets out. Now we're going to select total cost for this presentation. And in this area you have a choice. You know, if you want to input all these 4 options, but then you decide, you know what, I don't even want to show the wait for drop or no drop options, I can uncheck those and it's just going to show the buy now versus the worst case. So up to you. You can always come back and check or uncheck these. Just remember to hit the right or left arrow to trigger a save so that your Live Edge presentation will reflect these changes. Payment notes, very, very important. Now, I'm sure you guys are all aware of how tight it is in compliance right now and exactly, what kind of hoops you need to jump through to make sure that you maintain compliance and keep yourself safe. This is one of those things. You got to make sure and let the client know whether that PITI payment includes taxes and insurance. Now you can even put additional details in here like the fee details are estimates only and maybe different depending on your particular credit rating, You can put all that kind of good stuff in there. But I will tell you that it's going to end up as 2 lines of text total. Jim's question, how many characters can we put in the payment notes? I'll have to get a character counter to find out exactly for you, Jim, but you can put a significant amount in here. Let's just put in a bunch here and see where we end up. Okay, so it lets you put in a pretty good amount of payment notes in here, and you can see I've just finally hit the limit, and that is quite a bit of characters. Now, I will tell you that if you're going to put that much in, you're probably going to need to reduce the font size just a little bit. So if you're finding that your compliance department has told you you've got to put in this book on the payment notes, I would push back a little bit, because usually what they're asking for is things like the payment stream, and that's already represented on the presentation. I would tell you that 2 lines is probably going to cut it for you, but if you do need to put a little bit more, we can help you out by using a font tag on here to reduce the size of the font a little bit. If you need help with that, shoot us a note at support. Let us know what text you're trying to put in there, and we'll do a little bit of testing on it, make sure it's all going to fit for you, or tell you, hey, not all of it's going to fit, but we can fit X amount, and then we'll show you how to input it in here using those font tags so that you can reduce the size a little bit. So let's finish up our payment note here. So in this case, I did include them, so I'm going to pull this part out. And you can see that my default text is a reminder for me. I put taxes and insurance are not, so that I have to choose every single time. There may be some presentations that I only want to show a P&I payment or P&I and MI. But in most cases, I like to show the full PITI payment because, full disclosure is always the best. I mean, you've got a lot of other people out there that your borrowers are shopping you against, and guess what? They're not showing them a PITI payment. They're showing them P&I because they're scared to death of trying to see, a full payment. Well, the fact is the borrower is going to be responsible for that full payment, and they appreciate it a lot more when they know what those costs are actually going to be. All right, so I've got my payment notes in there. Now this gives you the option to alter the verbiage that goes in the more info sections in each one of the quadrants in Edge. So the monthly payment, remember we saw this in the analysis summary screen. I can put some verbiage around what this explains. Obviously we've got some default text in here. Feel free to use that. I already told them that it does include taxes and insurance, so I'm going to pull this part out. And that's all I'm going to do. Section overviews your monthly payments for each prospective mortgage plan. Jim's question, if HOA dues were in the monthly cost, where do you add that? So I would put that right back into that payment note field. So taxes, insurance, and HOA is what I would write here. But to add it into the products, it's in that monthly cost screen. So let's jump over to our initial product here. And then we're going to go to the last screen of the product. And HOA is right up here at the top. So if there's HOA dues, you're going to put them in right here. If there was other fees that we're not representing here that are monthly costs, you can put them in the other section, and you can actually edit this field. So, for instance, say garbage or something like that. They have a $25 a month garbage fee for this condo, something like that. It's not included in the HOA. You can write anything you'd like here. And I will tell you that kind of a cool factor here is this particular line item can be used for offsets as well. So energy efficiency offset. Of course, you got to spell efficiency, right? There we go. And let's say that that was negative $100. I can put a negative amount there, and that drops my pity payment by $100. Just make sure you label it appropriately. Otherwise, it's going to be some phantom negative fee that you don't want to have to explain. I'm going to rip it out for right now because I won't have any offsets on this particular presentation. And let's get back over to our presentation screen. So we've already dealt with the short-term savings area and the notes associated. Eric's question, can a disclaimer be put in the notes that will automatically populate for all one's presentations? They won't back populate to previous presentations because you can edit these for each specific ones. However, if you do choose to set a default, and Eric, you're in a site license, so they actually have control of this up at the top level. If you do choose to set a default, it'll come in like mine did on those payment notes field, where I had a default set of text that automatically populated here, and I was able to edit it. They can do the same thing for these additional fields. But again, that would be global for the company. So they would have to make that decision from the top level. All right, so we get to the short-term area, and this is one where I usually would advise that you provide more color around what this is. Just so you guys know, we're looking at a 120-month area here. And I'm going to go back to the analysis screen so I can make this point real quick. Now, in the analysis screen, you can see we've got $190 a month savings. Now, let's change these benchmarks back. This 190 multiplied by 120 is not going to give you this figure. I'm going to repeat that. The monthly savings multiplied by however months in the short term are not going to give you the short-term savings. The short-term savings is a little bit different. This is just a comparison of the pity payments against each other. The short-term savings is comparing the total unrecoverable costs for each loan. Those costs are interest, MI, and closing costs. Remember, we don't include prepaids there. So when we compare those total costs against each other, the difference between them is what you're seeing right here. Now, when we get to the final presentation, I'm going to show you exactly where those line items are shown so that when you explain this to your borrower, you'll have a clear way of doing it. All right, so let's get back over to our short-term area real quick. Julie's question, if you use the notes section on the yellow screen, meaning this yellow pad right here, where does it show up in the presentation? It doesn't show up at all, Julie. These are specifically notes for you so that when you revisit this later, say for instance you've had an initial conversation with your client, you find out that he graduated from UCLA, which makes him an okay guy. You find out he's got 3 kids, and maybe he's got excellent credit and 1 investment property already. Those kind of notes that you would use for not only qualifying them, but just being able to understand their story. These are where you want to put these. What this means is that when you go back in and revisit it later, you'll have all the information that you collected during that initial application. And obviously they're going to know that you're taking down notes when you're talking to them, but it's kind of comforting when you come back to him 2 weeks later and you say, hey, I know Tommy's birthday was coming up. How did that go? Did you wish him happy birthday for me? Whatever you started it off with. But this just gives you that little extra detail.
Paul's question real quick. He says, my pointer is small. He says, your pointer is small and lightweight and hard to follow when you zip around. How are you toggling between the different quadrants here? So what I'm doing is I'm using these left and right arrows, but you may have noticed that I'm actually using the jump buttons inside Edge. So for instance, when you hover over products, it shows you all the different products that you've already entered. So now you can move your mouse to whatever product you'd like, left click on it, and it'll take you to that specific product. Now, when I jumped over to the presentation area, I hovered my mouse over presentation, and I chose select report. That's the first screen of the presentation. Then I would just hit these right and left arrows to navigate through the wizard. If you want to get to the very end where you generate the link, just hover your mouse over presentation, hit preview, and it'll take you right there. All right, so let's get back to the verbiage on this short term. I might put something like, this compares, your total interest, MI, and closing costs between each loan. Savings shown is a difference in those costs over time. Something like that. Now, when you get to the long term, this is dependent on which metrics you show. So, for instance, and actually, I'm sorry, the short-term area here, I should have put that last bit of verbiage right here. So I put it in the wrong spot. I'm going to go back and pull that out and put it in the right area. All right, so let's paste that in here. And all I did was a copy and paste here, guys. So I'm just pasting my text in. Now, when we get to the long-term area, this depends on which metric you've chosen. So, for instance, total interest in MI paid, pretty self-explanatory. I don't think you need a whole lot of color around that. You might want to explain what MI stands for, just in case the borrower doesn't understand that yet. If you choose net worth, you'd probably want to say something about the net worth being a total of their equity plus any liquid assets that you developed for them over time. Now, for a cost of waiting presentation, if you're going to show net worth, you can see how much higher the net worth is on the worst case. That's because they're buying it at a higher value. But that said, if you are going to show net worth, you want to show an asset accumulation back in that reinvestment strategy grid that I showed you earlier, and earmark those monthly costs to go into an investment vehicle. That's going to level out the playing field here, so it's apples to apples expenditure. Now, total principal paid, also pretty self-explanatory, like the total interest in MI paid. But I would tell you, for a cost of waiting presentation, you just want to stick with total interest in MI here. All right, so now we get to the part where we're going to choose how to present this. And before I move on, Veronica has a question. She says, if I edit a previously done presentation for a specific client with different price points or programs and with a different video recorded, can they still view the previous presentation that I've sent them? So great question, Veronica. All of the Edge presentations, when you generate a link, that link points to whatever's here in the wizard. So if you come back in and change something inside the wizard, be it price points, be it programs, or even record a new video, that same link is going to reflect the new data. The old data is not going to be there anymore. It will have been overwritten. So that said, if you wanted to make sure and preserve the original data, what you would do is go back into the presentation and go to the analysis screen. And then you're going to use this copy analysis button. And when you hit copy analysis, this is going to give you the option of copying it under the current client or as a new client. If I'm going to show two presentations to this particular client, I'm going to make a copy under the current client. So I'll choose current and hit OK. Now what happens is it's going to open up the copy for me to now edit. So I can make all those changes, I can record the new video, and it's going to generate a separate link. So you'll have two links for this borrower. Now this second link will show all the new data, whereas the original will still be preserved. All right, so let's get to that last presentation screen here. All right, so we're going to choose email link, and I will tell you that this is always going to be your best option. Don't choose the print, don't choose the PDF. The reason for this is you can print or PDF off the live copy, as can your borrower. But when you choose the email link, this has all the extra goodies on it, things like notifications. If you send a PDF to somebody, there's no way you're going to get notified when they've viewed this. You know, there's no way you can put a Call Me Now button on there. It's not a live report. And in fact, you send somebody a PDF and you come in and make changes to your presentation, that PDF is never going to be updated. So the live link will automatically update for your client. So I would encourage all of you, use the email link first. If you have to print it or you have to save a PDF, do it from the preview here. So choose email link and make sure and select a quote date. Hit the preview button. And this is actually going to give you the best results for print and PDF as well. It's going to be a little bit clearer than choosing the ones inside the wizard. You have buttons down here at the bottom to print and save. So the print does exactly what you think it's going to do. It fires out a print job for you. So when you click on it, it'll actually give you a print preview so you can see what it's going to look like. And it should be coming up momentarily. And you can see this is what it looks like. Everything looks like it fits. You know, if you expect this to be printed, it's always a good idea to do a print preview like this, because if you've used really long product names for your products, you might find that some of them are being pushed out of the print view here. And that's a good indicator. You need to go back in and reduce the size of those particular product names. Now you can do the same thing with the Save button. This will just basically bring up the same type of preview, but it'll allow you to save it as a PDF. Now, as soon as this comes up, I want to show you something. When you go to save this, your machine, like mine, it might be set to hide extensions for known file types. And when you go to save, what it'll do, bear with me for a second here, there it goes. What it does is it automatically names the report based on the type of report and what your headline or borrower name was. And it puts a .pdf on the end. Now, if you overwrite this and you don't put a .pdf on the end of it, it's not going to know what kind of file it is. So you're going to have this unknown looking file type wherever you save it. Just make sure anytime you change the file name here when you're saving as a PDF, include the .pdf on the end of it and you'll be good to go. All right, so now let's go back into Edge real quick. We've got a preview open, which is good, but remember there's a couple of other buttons here I wanted to make you aware of. One is the call button. This is a click to call button. And what this does is it puts a green button on your report that says call me now. Now, by default, all of you have three click-to-call credits available in your accounts. Those are the freebies. If you want to continue using it, you can purchase additional credits. You don't have to, though. Don't worry about it. We're never going to automatically bill you for these credits, so you purchase in advance of what you want to use. If you do choose to use this, it'll put this button here, and when the borrower clicks on it, or anybody clicks on it for that matter, it asks them, what's your name? What's your number? Then it gives them an option to call you now. Now, what happens is Edge automatically will call your phone, whatever phone number you have listed in your settings, and you'll get a message from us saying, you know, hi, this is Mortgage Coach. You've got a click to call from whoever this name is here. And our system does the best it can to sound out the name, but you know, if it's an oddball name, it might sound kind of wacky. But it'll say you've got a click to call from Joe Smith. Do you want to accept it? And all you have to do is you hit 1 on your number pad, and it'll tell you what to hit. Hit 1 to accept, hit 2 to decline it. Now, if you accept it, it'll automatically call that borrower on the number they entered right here, and then it'll connect your 2 phone lines. So you'll be immediately connected. If you choose to decline the call, what you do is you hit no, so you hit 2 on your keypad, and when you decline it, a scheduler will pop up here on your client screen asking, you know, I'm not available to take your call right now, but if you give me a time that I can call you back, I can make it to you. So it gives them a scheduler on what day and time they'd like to be called back. Now, when they fill that in, it automatically sends you an email and a rate watch alert to let you know you've got a click to call. You know, it gives you the details of what that person entered, so you can immediately call them back when you need to. All right, so question from George real quick. He says, how do you enter the picture, business name, info, all the NMLS number, all that kind of good stuff? So everything you're seeing up here in the right side, how do you enter that kind of detail? And that is actually inside Edge. What you would do is just go to your settings, and you can see that you've got areas here where you can type in all your detailed information. You've got an Images tab that allows you to pop in your headshot and your logo. Now, if you're under a site license, your logo may already be pre-filled and locked. If that's the case, you just won't see the Browse and Clear buttons, but the logo will be there for you. Now, the settings area also is where you can manage your product templates, your fee templates, and we talked about this earlier, your disclaimers. So, for instance, remember those areas with the short-term area? You know, short term, remember I wanted to add a little bit more color about what that actually includes. If I add it right here, it'll automatically appear as the default for future presentations. It won't overwrite past presentations. If you wanted to change your disclaimers, there's a disclaimer for each one of these reports. So this one is for my total cost analysis, but if I need to change it, I can overwrite this. There's also an extended disclaimer field. This is for all your state licensing. So for instance, this gives you a giant page of information, and you use this when, because there's a very small area for the disclaimer on the main report, you use this when you've got to indicate all your different state designations, all your license designations. You can put them all in here, all the additional verbiage that your compliance department requires. And once you do that, what happens is on your analysis, there'll be a little button on the lower right here that says More. So it'll be right next to your disclaimer. And when they click on that, it'll actually pop up that full extended disclaimer for you. Stephanie's question, can you send me a PDF of the presentation you just created? Stephanie, no PDFs. No, no, no. What I'm going to do, though, is I am going to shoot you the link for it. So when you hit the share button, it automatically gives you a link to the presentation. So what I'm going to do is I'm actually going to respond to your question right now with that link, and I just sent that back to you. Go ahead and click on that link, and what you can do is if you need it in a PDF, you can hit save there and go ahead and save it as a PDF. But I'd like you all to get used to try and use the live link as much as possible. Looks like a couple other people wanted it as well, so I will send it to all. There is the link to my presentation. All right, cool. Now remember, if you have recorded a video on this, when your client clicks on that live link, the video will automatically pop up. So I'm going to show you how to get to that part right now. So let's get out of our disclaimers for right now. I'm going to go back into the cost of waiting presentation, and you can see it left me off at the last place I was at in the wizard. Now if I had logged out of Edge, closed the browser, and came back in, it wouldn't know where I was in the wizard anymore. But if you're still in the same one, it'll automatically bring you back in. Now remember, there's a way to send Edge View alerts to your partner. Now that was because we entered the partner email in that first screen of the wizard. So if I wanted to make sure my partner receives those same alerts like I get in RateWatch and like I get via email, the partner will get an email letting him know when the person has viewed this report, how long they've viewed it, and it actually has a link to the report so the partner can click on it and see, oh, that's what they were looking at. Now, the cool part about this is when you are working with a financial planner, CPA, realtor partner, and you choose to include them on this, let them know ahead of time, hey, I'm going to copy you in on this, so you're going to get notified every time this gets viewed. It gives them an idea of how much traction this is getting for them from a marketing standpoint. I mean, this is a marketing presentation. We want them to know that, hey, I'm putting this out for you. It's got both of our branding on it, but look at how many clicks it's getting. I mean, especially if you post it somewhere like Facebook. Oh, Stephanie says, thank you, unable to view the YouTube as it is blocked by the company. Ah, thank you, Stephanie. That makes it very difficult. But yeah, you can actually click on the Edge presentation and you can still grab that PDF there. But I understand that that's rather difficult, especially when you want to revisit these kind of sessions. What I will tell you, Stephanie, is working because we have a couple of organizations that do the same thing. They restrict YouTube. When you want to watch these, try watching them on your mobile device. So for instance, on your mobile device, open up YouTube and go to youtube.com/mortgage coach. And I'll show you what that looks like. This is going to take you to our main page. And you can see that all of our videos are loaded here. And you can cruise through them if you'd like. You can choose to search through them. Or you can just look at all the videos we've got. And I'll show you what I mean here. So for instance, if you wanted to watch last week's intro session from your mobile device, you could click on this guy and it's going to play the entire thing for you. That's been a really effective workaround for a lot of our organizations that restrict YouTube. But that said, I'm actually working on getting some hard copies into a different location for people who have this restriction, so you can just download them and watch them on your computer. When I get that available, Stephanie, I'll make sure you get a copy. All right, so let's get back over to Edge. And I'm checking the box because I do want to send that Edge View alert to my partner. Now it's time to generate the link. So I'm going to hit Generate Link. And this is the live link that's going to come up right here. And you can see I've already had 2 clicks on it because I sent this to you through the chat box here, and a couple of you have clicked on it. You can always come back here to see how many clicks you've gotten. Don't worry about Social Pro here. This is actually a deprecated function that's no longer available, so that's why you won't see it in your account. this used to allow you to have a kind of a landing page in Facebook, but unfortunately Facebook, when they changed to the timeline, kind of negated a lot of the features about this, so it's not offered anymore. It just happens to be in my sample account, so I will have to get rid of that. Now at this point, we've already got the link. I'm going to copy it, and I'm actually going to generate a new email for my client. So hang tight for just a second. So what I've done here is I went into Outlook and I just created a new email. And obviously I'm going to put in my client's email there, give it a nice subject line. And for now, I'm just going to paste my link in there. And then I'm going to move this aside because I'm not quite done working on this presentation. I just wanted to have my link in the email so that when I'm ready to write it, it's already there and I don't have to mess with it. Now the next step here, and very critical, especially for marketing presentations, add audio video. Now when you click on Add Audio Video, it opens up the same kind of preview we were looking at earlier. Now the difference with this one is it's actually got a record message button down at the bottom, but you can still highlight on this one. Now one thing I want to make you aware of is that the Edge Video Recorder will only capture what comes through your webcam. So sound and video that comes through your webcam. It will not capture your mouse movements if you're mousing around the page. So make sure that you understand that. Now, the reason I mention that is you can still highlight this report. So say, for instance, I wanted to draw the client's attention to the monthly payment differences. What you do is just hover over any of these fields, any of them that has a box around it, you can left click on it and you can highlight it. Now, whatever state you leave this presentation in when you close it, that's how it's going to appear when your borrower clicks on the live link. So if I leave these ones highlighted and hit the X button, it's going to close that out, but when my borrower opens it, these ones will already be highlighted. That goes for any highlighting you do, or if you choose to leave a more info section popped out. Say, for instance, I wanted to draw their attention to, I don't know, the payment breakdown. So I'm on the payment breakdown tab. I can highlight whatever I wanted to. Maybe I want to highlight the difference in mortgage insurance between these guys. When I hit the X button, if I send the link to my borrower and the borrower opens it up, it's going to open up with this detail screen open, and your video will be playing behind it. So kind of a cool way if you're a little bit tentative about video and you just want to do audio at first. That's kind of a cool way to do it because it actually does hide behind this window and it'll just talk them through it. Of course, make sure to let them know that they're going to need to close this window in order to get back to your full presentation here. All right, so in order to record the video, there's a couple of brief setup steps and you only have to do them once. You right-click anywhere on your presentation and click Settings. Now when you do that, it's going to ask you about your webcam and your microphone. You've got to make sure the appropriate ones are selected here. Now you can see on mine, if I hit the drop down, I've got two different webcams. I'm working on a laptop that's got an integrated webcam and I've got a plug-in webcam. I'm going to choose my plug-in webcam because it's a little bit better than my integrated one. Then I'm going to jump over to the microphone icon and I'm going to make sure that the correct microphone is selected. And you can see I have a lot of different mics on here. My webcam, I have my headset that I'm talking to you on right now. I've got a dock mic, I've got a microphone array. There's all kinds of mics in here. Just make sure that you've selected the appropriate one and that when you select it, you see the meter bouncing. If you don't see the meter bouncing, that means it's in use by another program. For instance, right now, I'm using this CMedia headset for GoToMeeting, so it's not going to capture it. But make sure you've got the right one selected. And you can go through all these tabs, and if you want, what I would advise is on local storage, just drag this all the way to the right so it's unlimited. It's not going to take up more than about 20K on your computer, which is tiny. It's smaller than an email. And then this second tab here, it's just your allowing settings. Make sure to allow it and hit remember. It's just going to make sure that you don't have to do this every single time. And then the first one, enable hardware acceleration. Most of you, go ahead and check this box. It's not going to be a problem. If you're running an older computer, like 6 or 7 years old, and it's got an old graphics card, you may find that you get some greenish hues in your video that are not supposed to be there. If you are finding that, try unchecking this box and try your video recorder again. It should actually clear it up. All right, so all that said, we're going to go in and we're going to record message. Now, when you hit record message, you're going to see a little video window pop up. Now, what's going to happen is and again, I've got my webcam and mics all attached to GoToMeeting right now, so we're not going to see me at this point. But what will happen is you'll see yourself in this screen, and it'll be a live version. And all you have to do is hit record. And one of the new features that we just added is you no longer have to jump over and hit stop. You can use the same button to record and to stop the recording. So when you click on record, you'll see it says recording up there. Just keep your mouse in the same place and then hit it again, and it stops the recording. Now you don't have to look away from the webcam and lose eye contact to finish your recording. So yeah, a lot of people have been asking for that one. That's one of the cooler features in here. All right, so once you have hit stop, your recording is already attached to this presentation. It's part of it. So now if you were to send that link out to your client, it's actually going to have the video attached already. It's going to pipe up and start playing for them. All right. So then one of the other things that we discussed early on was how to get the rate watch stuff in here. Now we're showing them the cost of waiting. We're showing them what can happen with the rates. Now let's show them why. So I'm going to open up my rate watch. Now you should already have this installed on your computer. If you don't have it installed, you can go to www.ratewatch.com/download. And that's going to take you to the installer. You do need admin rights on your computer to be able to install this. So if you don't have those yet, you might have to contact your IT department to help you with the install. Now that said, check out what's going on today. We're actually having a great day. So I'm not sure I would show this to my client with the cost of waiting. But what I might do is I might isolate a day when we had a really hard day in the market. This one right here, for instance, March 4th, we had a pretty significant drop. So if I want to show this to my borrower, I mean, I might want to show them both. I might want to show them this screen as well as another screen showing just the day watch for this. Now, in order to do that, all you have to do is right-click anywhere on here, hit copy, then you're going to go back to your email, and after you've entered all the verbiage that you want to talk about, you're just going to right-click and hit paste, and that pastes that rate watch chart that we were talking about. I'm going to get rid of that icon there. All right, so the other thing I would probably include is a day watch of this particularly bad day. So I'm going to go to day watch, and you can see for today we've had a great day in the bond market. We're doing really well. We should expect to see a lot of great pricing for today at least, maybe even through tomorrow. But I want to go back and show what happened on March 4th. So I'm going to use the date selector, go back to March 4th, and you can see this is where we fell off the cliff. This is the one I want to include in my cost of waiting because this really says what I'm trying to say is, look, this is so volatile. We had 2 points here where we should have seen pricing changes on that day. Now that could be the equivalent of a half a point price change in one day. So I'm going to right click on this one, hit copy. I'm going to go back to my email, and I'm probably going to say, here's the daily view of what took place on 3-4. And then I'm going to paste that one in there. Now I've got two different rate watch charts that I can include with this presentation, and I've got my link. So now all it's about is formulating it so it's nice and clear. I want to put some rosy text in there. I want to make sure and refer back to whoever I'm partnering with on this. Got to cross-sell them at every point. I want to put in some basic details, thanking the client for their time, all that kind of good stuff that you guys already know how to do that. So I'm not going to bore you with the details of putting together a decent email. But I do want to show you the technical side of this. So let's say I can do it this way. Please click the link below to see your personalized Edge presentation. Now this is a perfectly acceptable way to do it. If they click on this link, they're going to get it. Now, I have had a lot of questions, and this comes up on almost every Thursday training call. What about those clients who a link kind of scares them? They don't like to see a link like this because they're worried it may take them to a place that they're not supposed to be. So what I would tell you is I would add a little bit of verbiage. So please click the link below to see your personalized Edge presentation on our secure site. That always helps. And then if you want, you can actually change what the link looks like. So what I'm doing is I'm just copying the link. And I'm going to add an additional, just basically added to carriage return right here so that I could get another enter. And I'm going to put click here for your presentation. Now, if I want to turn this batch of text into a link to my Edge report, all I have to do is select the text, right-click on it, and I'm going to choose Hyperlink. Now, the text to display up at the top here says click here for your presentation. But where do I want this to point to? I'm going to paste my Edge link right in there. Then I'm going to hit OK. And now that has become an Edge link. So these two are identical in terms of their functionality. But now that I don't have a link-looking idea in there, it looks a little bit cleaner. And, you know, I've had good reports from people saying, you know what, I get a little bit more acceptance on this one, and they're more likely to click the link when I mask it with some text. So feel free to do this. It's a great way to just kind of clean up the presentation for you. All right, so we are way over time today. I'm very sorry for going over. We got a little involved on this particular presentation, but thank you all for the ones who stuck around. I really appreciate you sticking this one out. I do have a quick poll question for you because I want to kind of gauge how this is going to go. I want to know, are you guys going to create 5 TCAs in the next week? I need to make sure that all of you are going to put in the effort to make this happen. I'm going to come back here and teach you every single week. I'm going to show you how to put these together. I'm going to give you the step-by-step every single time. But I got to make sure that my training is getting some traction here. And if you guys are finding that you're just still a little bit confused, feel free to respond that way. It's okay. I'm going to check out these poll results after the call today. And for those of you who are just completely lost on this one, I'll talk to my success team and see if we can find something to help you out a little bit. But that being said, thanks again for joining us today. We'll be here same bat time, same bat channel next week, and hope to see you all again. Thank you very much. Bye-bye.